Tackling climate change is the greatest challenge facing our society, and we all have a part to play. So how can one bank make a difference? By giving our customers a green mortgage that gives a better rate the more energy efficient your house is. By working with partners like Octopus Energy to make it easier for customers to own and charge an electric vehicle. By joining forces with organizations like Microsoft to help our customers understand and reduce their carbon emissions. By providing billions of pounds to build the world's largest offshore wind farm. By reducing our funding of oil and gas and pulling out of coal altogether.
And by putting our own house in order, we achieved net zero for carbon emissions in 2020 and aim to be net positive by 2025.
We all have a part to play in tackling climate change, and at NatWest Group, we're going to make a difference.
Well, it's great to be with you all today. My name's James Close. I'm the head of climate change here at NatWest Group, and I'm joined by Katie Murray, who's our chief financial officer. And last year we were joined by Alison Rose, our chief executive, and of course our advisor, Lord Nick Stern, the father of climate economics and a great luminary and wise counsel to us all. But we're really delighted to be able to continue the conversation and talk about what we've been doing over the course of the last year on climate change and give you a sense of what's on our agenda for the future. I think it's been really quite significant progress since we were with you last year. We signed up for the Banking Alliance for Net Zero, which is part of the Glasgow Financial Alliance for Net Zero, which has been organised by Mark Carney and includes asset owners and asset managers, and is a really important part of the climate finance architecture running up to the COP. We've also developed a collaboration with Microsoft, where we're going to work with our customers to help them understand their carbon footprint. We know that 88% want to do something about sustainability, but more than half don't know where to start. So we think giving them carbon footprinting data will be a great step forward for them, and we're delighted to be working with Microsoft on that. We've also published our emissions from 4 sectors, which is an important step forward in understanding the climate impact of our financing. And we've achieved net zero in our own emissions across our estate, and also in terms of our employee contributions as well. We've lent over £12 billion for green causes against our 3-year target of £20 billion. So we're well on track to achieve that in the course of this year. And we've also worked with retail customers launching our green mortgage product, and we'll really expect to do more on the retail side of things to support customers making the transition to lower emissions. And Katie, from the finance perspective, what have been the highlights as far as you're concerned?
Thanks, James, and good morning, everybody as well. It's lovely to be here. Unfortunately, only virtually, but we live in hope. Look, James, I think the biggest highlight has actually been starting to move it out from the theoretical into the kind of actual production. So, I mean, reporting, we've published our TCFD report this year, and huge credits to the team in my team that did that, because that was not an easy thing to get out the door. But when you get to the point of actually partnering with people across the bank, producing the report, you get to see what you know and what you don't know. And I think it's only when you actually get real outputs rather than the kind of theoretical that you really kind of start to learn. We've obviously, as many other people have done a lot of looking at the balance sheet in terms of what risks do we have in the balance sheet and how well do we understand them. We've also done some very nice investment kind of issuance in terms of things like the social housing bonds that we've done, as well as the first kind of green MREL issuance as well, which was done by our treasury team, and very, very proud of that. And interestingly, tighter spreads and new funding coming into the market. So from mine and the treasurer's perspective, that's a great kind of way to go. But I really do think it feels like it's becoming a reality. We'll look back and think gosh, we still had so much to learn at that stage, but now it's gone away from the theoretical into actually the delivery.
Great. That's brilliant.
And James, what's when I look at this year, what are your kind of priorities that we're looking for?
Yeah, well, of course, we're principal sponsors of the COP in Glasgow in December, and we'll have a lot of activity around that. But I think in terms of the work that we're doing on the finance side, from a climate perspective, it's really important that we give Katie and the team the information that they need to help our relationships managers make good decisions and allocate capital as effectively as possible. So we think about that in terms of the top down and the bottom up part of the data provision. So top down is looking at sector level approaches, and the bottom up is gathering data from our customers specifically. And of course, we've got the climate biennial exploratory scenarios work, which is enabling us to gather data from our customers. We'll then need to use that data as we start to think about how we price and allocate capital in a carbon constrained world. So we've made our commitment to halve the climate impact of our financing by 2030. So as we move back from there, we're going to have to work out how to allocate that carbon on our balance sheet as effectively as possible. And we need decision-making processes and credit processes that are going to support us to do that. And of course, we really want to continue to make the investment case around climate change. And in our role as a leading bank, we're very keen to make sure that we're communicating effectively the benefits that has around reducing risk, enabling us to acquire and retain customers through giving them better and more targeted propositions and services. And of course, we're hoping that will feed into the better margins for our lending as well. So it's really a huge work program. It's one that is a shared endeavour by both my team in the climate group, but also within the finance team, but more and more in our franchises as well, as they engage on this journey alongside us. And Katie, it's really, I think, interesting to think about how investors see this and what kind of questions they're asking around our climate strategy and the benefits it brings to them as investors.
Yeah, look, I think, James, it's a great question. And what I would say is there's growing kind of activity. What we see, I think, often is a lot of activity from the investment house's governance arms in terms of voting on resolutions, pushing companies to make the change. What I would say within the portfolio manager space, we don't get as many questions as I think we're sometimes prepped for, or that we're actually keen to have. And then you go into a meeting where actually the entire meeting's about that, and you realise that different people are, as we are, at different stages of development. You know, and it's one of these things, as the governance arms, I think, get better and stronger, is to tighten the connection with their portfolio managers to make sure that they're pushing. But then also it ultimately comes to all of us as individuals to be pushing where we are making the investments to kind of get the chain kind of to work. So I would say there's more questions now than I would have got 2 years ago, but I am often surprised in some meetings where I'm not getting questions. And if I look at this week, I've done a lot of IR in the last week, and there wasn't many, and then all of a sudden there was one important investor for us, and it was very, very significant. And I said to them, why is this such a big topic in your place? And they said, the people that invest with us are wanting us to change our profile. And that's what really kind of makes a change. But I think all of it there has to be data, there has to be information. So we published, obviously, the TCFD. We also published our ESG report to kind of not just talk about the climate, but also to talk about the wider kind of ESG and how that all links to purpose. You know, and some of them are choosing us because of that. Some of our investors are choosing us because of what we're saying on purpose, and that there is that really strong link, which is also very gratifying to see. You know, rigor is definitely increasing, you know, in terms of where we are, and it's no longer acceptable for any of us at a senior executive level to kind of go, that's climate, we'll just leave James working in his study, wherever it is your base, James. It's something that we all really need to be able to talk to and to talk about effectively. for us to kind of make the change. And I do think, I mentioned earlier, some cost of funding has changed as a result of it. You mentioned mortgages in terms of preferential rates there. So that's changing for our customer base. When we've done some of these issues, we've been able to bring in tighter than we would have expected. So that's our funding is also changing. And one of the conversations we are having, and I'm sure many of you as treasurers are having as well, is do we give incentivized internal transfer pricing funding? So if the relationship manager is lending out to a green kind of product, do we give him some kind of basis point benefit? The big debate then is, do you get to the point of giving a negative on the other side? Because, I'm still trying to balance the books here in terms of how we do that. And I think that's the big debate. It feels to me at the moment it's much more still the time for carrot than it is the time for stick. So therefore, when you see the tightening spreads externally, that helps you direct some of the carrot in the right way. But I would really encourage you all as part of this conference to have that conversation of how do you differentiate? How do you make a difference? How do you make sure that you can actually actively encourage portfolios in certain directions? And we're pleased with what's happening on the green mortgage. It's a start. We need to go much, much further to get to 50% of our balance sheet. And James, when you think of the people that are watching us this morning, what would be your messaging to them?
Yeah, well, I think you've encapsulated some of the sort of really challenging areas that we need to think about and address in the points you've made there, Katie. And I think we need. I think there's a realization that if we don't really very rapidly address our emissions trajectory, we are going to be in a very, very difficult place. And a lot of people call it the decisive decade in terms of the next 8.5 years, really, to get to that point where we're almost halving emissions. So we think about climate change as such an important issue. We take it very seriously as an organization. I mean, I've been personally working on it for a very long time, and the whole kind of dynamic has changed enormously in the course of the last couple of years. And I think that financial flows are going to have to fundamentally change to enable us to make that transformation in the economy. And we are going to make some really difficult decisions about how we allocate finance, how we price finance over the course of the next 10 years and beyond. And as Mark Carney says, climate change will be part of every single financial decision. And I think as we realize that, it's worth us thinking about how do we incorporate that into the day-to-day financial decision-making processes that we're using within our organizations, and also alongside our stakeholders as we talk to them about how we mobilize the funding for our collective balance sheets and what we're trying to do in optimizing that funding. And I think it's a constant theme that both Katie and I have come back to, which is the importance of getting the right data. Climate data is something we've been working on for a very long time, but there's still a lot of assumptions that we have to make to give us some validity in the accuracy of that data and making fit for purpose for these really important decisions. And of course, it's not all financial data. You have to get into the scientific side. You have to use some proxies as well. And when you get customer data, you have to interrogate it to see whether it's going to be a good steer today, but also what does it mean in terms of future trajectory. So we use that climate data and align it with the finance data, and that way, finance really tells us what the value of the future is, and we get to this point where we really understand the value of mobilizing finance to address climate change. So I think if it's not already on everybody's agenda, then I'm sure it will be in spades over the course of the next few years. And I think starting to prepare for that is really important, and having new tools for new times, I think, is central to making sure that we're ready to do what it takes to mobilize finance for climate action. And Katie, what would your message be to the audience that are participating today?
Look, I think we're at a really exciting time if in terms of where we are, it's the climate conversation has moved out of the kind of the NGOs and things like that very much into the mainstream. And I think, we should feel very, very proud of the work that we're doing in terms of the BES stress test that you've talked about. I mean, it's difficult, it will be wrong, that's fine. But actually, we're really kind of leading a lot of the way of thinking. And in that, I think, has come great opportunities for us as individuals, but also for our staff in terms of the development that we have with there. And I think, finance functions have got to work really quickly and change quickly. And actually, at the moment, I talk about that we run, oh gosh, sometimes if you look at things like resolution programs, we run 7 different balance sheets at any one time. The reality is this is a new balance sheet. It's got a new method of calculation. It's got a different kind of impact on society. But I can absolutely guarantee that, in a few years' time, I'll be submitting my reg reporting returns to the regulator, and I'll be submitting my climate reporting returns to the regulator, and they need to reconcile. So I think what I would really advise people, and it's a conversation we're having internally at the moment, is move along this journey quickly, but know that ultimately the data's got to be of the quality that we can submit it to the regulator, that it reconciles to our regulatory information. And you know a lot of this better than I do in terms of people that are listening. We submit 14,000 forms to the regulator every single year. And if they're all going to have a climate column in them, that's a huge amount of work. So build your data structures properly today so that you don't have to go to your investment committees to make the application for some ridiculous sum to kind of get your data models kind of stabilized and well controlled. I think that's really, really important in there. But it's also, it's exciting. It's exciting to talk about a new method of evaluation and talk about how actually we can really make a difference. I think it's also a great means by which to kind of continue that connectivity out with the frontline businesses and actually help them in their journey. So if I'm an RM and in the morning I'm visiting a cement maker and in the afternoon I'm visiting a farmer because I cover that region, I'm having 2 completely different conversations in terms of climate. And actually, how do we help them in terms of how we kind of tool them and give them the right kind of support from a finance perspective that's in there. So I think, make your learnings, see it as a real development opportunity. I think it's something that, in years to come, you'll be sitting thinking, I really played my part in the transition of the economy. And that's why my grandchildren still have got Bs and all of those things. And I think that it is as basic as that. It's an opportunity to really change the outcomes for us. And there's not often in the finance department, you can tell yourself down to such a great kind of purpose. I think work with the businesses in terms of what they're doing, get your data to the same quality as your reg reporting data and your financial data. Don't assume that it's because it's new that we should do shortcuts and things like that. They will come back to kind of bite you. Be a little bit mindful of litigation risk in what you're saying externally. I would say at the moment, the risk is at the lower end, but we're making huge external statements these days on some of our targets. And actually, we need to be mindful that as we make those statements that, people are reading these accounts that are relying on them for information for investment decisions. So I don't think you should ever forget the kind of litigation risk of that. And what I would say is also enjoy it. I think it's a transition that creates a real opportunity for us to do something that is really supporting the economy, supporting our personal development. We spend huge amounts of times in absolute minutiae of data in what we do in the treasury worlds. And actually this allows us to step back and think of it in a different way, which is why I think issuing things like the green bond in terms of MREL or the social housing bond, actually that's really impactful. And you guys control the purse strings ultimately. So work out how to use them well and actually really get onto this campaign to do what we need to do to make sure we can deliver the climate change that we need. Thanks very much, James. And then everyone enjoy the rest of your conference. James, I think I'm handing back to you for some final words.
Thank you, Katie. Really, really great advice then. I think continuing the theme that Alison and Lord Stern talked about last year, which was that, of course, there's risk that we have to deal with, but there's also enormous opportunity around this transition. And those of us in the finance world who come to be grips with the challenges fastest and quickest are going to benefit from those opportunities most. So great, really great talking to you, Katie, and fantastic working with you and your team. And we really look forward to continuing our collaboration and hope we also can do so with many of you as well. So thanks very much indeed. Enjoy the rest of the conference.
Thank you. Bye-bye.